For Good Business Update, Michael Wilson joins us now from London. Great to have you. Good morning, Michael.
Morning. No surprises, really. Big interest rate rise, as expected in the United States. That's the Asian markets not doing too well. I mean, the takeaway from it, and I'll come on to more detail of it later on, but the takeaway is that there's going to be much more, and stocks have been very volatile, as you'd expect. And as a result of all that, the Hang Seng down about 2%, Shanghai Composite down about 1/3%. The Nikkei slipping as well. Japan's central bank left rates unchanged. I want to come on to a bit about Japan's economy in just a moment, but it's worth also noting that chip-making nations are, like the United States, are now quite obviously teaming up against China. Semiconductors, obviously one of the most critical technologies of our time, and also there's a small matter of national security about them as well. So the US, along with South Korea and Vietnam and Japan, have looked to form alliances around chips to head off the technological rise of China. Now, back to Japan, and against what all other central banks are doing at the moment, the Central Bank of Japan is remaining relatively soft. The weaker yen used to help competitiveness against China and South Korea. The yen has now fallen about 20% this year against the dollar, and it no longer helps Japan's economy, simply because a large part of what used to be their big export sector has now moved abroad, and thus a weaker yen makes those kind of imports to help their eventual exports become more expensive. And here's an important one as well. SoftBank, which, as you know, is a big Japanese concern and came under a lot of criticism to reorganize its Vision Fund investment vehicle, is now going to talk to Samsung about ARM. Now, there's a load of issues here. Samsung's in South Korea. ARM is a UK company. The authorities here would very much like it to list in London. It looks like it's slipping away at the moment, but that's going to be an important move. That'll happen, we think, sometime in the late autumn. Sri Lanka. We've been following that. Inflation is now up to 70.2%. It's struggling with the worst economic crisis in 70 years. Official data, food prices up 84%, which is not good for those who have to spend the majority of their income on products, on like comestibles and like food and so on. And also it's a bit of a setback for the nation, because the central bank was saying that it thought that inflation had actually slowed, and by increasing interest rates and tightening things up, it thought, and remember, it's in the middle of discussions with the IMF. The IMF move when other creditor nations do, but Sri Lanka still has to prove that it can actually stabilize its economic situation. Flight prices out of Russia. Here we go. As Putin calls up for reservists in the Ukraine war, threatening nuclear action and all the rest of it, the cost of flights departing from Moscow have risen about 9 times. A lot of countries have placed bans on direct flights from Moscow, for example, the UK and the United States and so on, and most of mainland Europe. However, it's quite possible for people to bypass that by going to intermediate stops like Istanbul, and Armenia and so on, but those flights are beginning to sell out now as reservists begin to be called up in Russia. Let's turn our attention to the United States, and 0.75% interest rate rise there, very much as expected, but I think very, very hawkish indeed, and saying there will be more interest rate rises. I mean, that was what was in the small print. Basically, that's what I took it to mean. And it could be peaking at any time. Inflation is running at its highest level since the 1980s. It could be 4.6% interest rates in 2023. So that's what they're flying. No decreases as far as stock futures are concerned. In fact, completely. There are big decreases in stock futures. Big decreases on the Dow yesterday, and so on. No decrease in yields on the 2-year Treasury. It topped 4.1% yesterday. And again, I've been reading. There's somebody called, believe it or not, Michael Wilson. Yeah, another one. But Morgan Stanley saying boring is beautiful. Who am I to argue with a Michael Wilson saying that? What he's saying is basically, if you want to get into stocks, you want to be investing, do the boring ones, because they're the ones that are going to last, rather than the the risk-averse high-tech things. Here, UK interest rates, again, expected to rise probably by 0.75%. We'll know at noon. It's the seventh time in a row now that interest rates have risen. The last month's 0.5 percentage point was the largest increase for 27 years. There's difficulty about what could happen to the UK economy with interest rates this kind of high. The Office for Budget Responsibility looks at what might happen, and the majority think that price rises. The majority of people in the street, price rises will continue. And if inflation continues to rise as it's doing at the moment, the OBR, the Office of Budget Responsibility, is predicting interest rates of 3.5% by the end of the year. According to one survey, the difficulty with these kind of surveys is that, if somebody comes up to you in the street and says, would you like more to be spent on health? You'd probably say yes. Education, probably say yes. Well, given all that, a recent survey has said that 50% of people whom they surveyed has actually are in favour of higher taxes and more spent on social things like social benefits and health and education and so on. As far as the Truss New Britain is concerned, UK business energy prices to be cut by a half. We are going to get that mini budget, obviously, tomorrow as well. So we'll see if there are going to be any further tax cuts, particularly about corporation tax, and of course, personal tax cuts as well. Oil, another wild ride, really, yesterday. Energy traders watching President Putin escalate the war in Ukraine. EIA report signaled some crude demand weakness. A lot of dissent, really, as far as the oil price is concerned, in terms of global growth. But it did rebound this morning after sliding 1% yesterday, and its concerns over tight supply now into winter, which is slightly eclipsing those worries about global recession. But again, I suspect only for the experts to get involved. It's just terribly volatile as we speak. That's the global view.
Really, very well said, because it's going to get tighter in the winter months, and let's see how that output will help, cushion the effect of winter. But hey, just very cheeky comment here. Who am I to argue with Michael Wilson telling you the way it is, the other Michael Wilson, I should say. But real quickly, yesterday, Jacob Rees-Mogg, business secretary, said something very interesting. The wholesale cap now, 211 per megawatt, £211 per megawatt, and £75 for and that's also for gas, for the wholesale cap values for gas. That's a very big number that came out yesterday in the UK, and business owners have been scratching their head. What will it come down to when they finally get that energy? That's the energy rate cap. What's going to be the knock-on effect on businesses? Is it really anything done at all? But they said 3 months or 6 months down the line, they're going to review again. And tell me the impact of rate rise in America.
I think key to what you've just been saying, Rufai, is yes, they will review it. So businesses saying, yes, fine from October. But what's going to happen, in 6 months after that? That seems to be the key. The prices now are reduced slightly, but again, the real pressure won't come on until the early spring, until we're over the winter, we hope. But also contracts have to be renewed as well. So I feel as though, yes, you're right. Jacob Rees-Mogg and the rest of the government are saying they're going to review this in 6 months' time. Businesses saying so things are going to get worse in 6 months' time. How can they plan? This is the problem, isn't it? About everything to do with energy costs and so on. You can promise these. You can say the details have not been. I don't understand why the details have not been worked out, as I keep saying, but they haven't apparently worked out in November and then backdated to October and so on. These are not, if I were a business person, I'd be sort of despairing right now at how much I need to set aside. Where's my business going to go? Business doesn't happen tomorrow. It happens in 6 months' time or a year's time. Especially if you're a medium-sized business, you have to plan for that, for all sorts of things, all sorts of forwarding costs and so on, all sorts of hedging. What the government is proposing does not actually fit the business timetable. I think that's the bottom line. As far as the United States is concerned, look, there are two things about it. If you look at it completely flatly about monetary tightening, that tends to be such a clumsy instrument, as I keep saying. However, disregard what's happening in the United States at your peril. It is the kind of economy that does find it relatively easy to bounce back. Reason being that the mobile force is relatively, and always has been, relatively mobile. And also there's a federal system of states that are mandated to top up losses in other loss-making states as well. So yes, I think things are going to be very, very tough indeed. But remember that what's actually happening now in the world may look very, very different in 6 months' time. Who'd have thought, for example, that Ukraine would have taken so much back from Russia's invasion as we stand right now? It was supposed to be easy for Russia to invade. It wasn't. Who's to know where things are going to be in 6 months' time? That is not an excuse for not forward planning by any means at all. I'm just saying that things are probably very, very different. And I would imagine that the United States will probably pull through this relative hawkishness. It'll be painful. I mean, and Jay Powell did say that yesterday. He said it's going to be a painful process. It will, but I think it will probably pull through.
Well, Sri Lanka, while Sri Lanka is still waiting for that helpline from the IMF, inflation 70.5%, as you pointed out. Prices have gone up 84.6%. Shortage of everything from fuel to medicines. But the Indians are finally coming around. They've opened talks this week with Sri Lanka. They've also promised to defer payment on imports up to the tune of about $1.2 billion. How much help would that offer? And is anything coming from China? Because they were hoping on both India and China for additional help. And I don't know whether you want to talk about Donald Trump and his travels with his sons, how the privilege, cheats the system and cheats the rest of us, and whether or not this is ominous for Donald Trump, particularly now that the prosecutor, the New York Attorney General, is threatening to even take the matter to the level of federal authorities who have the powers to institute criminal proceedings. Yes.
I tend to think that, again, I have no idea what's going to happen with Trump and so on. It may be an overriding pressure on Biden as Biden comes up to the midterms, and it may be an overriding pressure as well as Biden comes up to the full term elections as well. Some extraordinary things are happening in the States, aren't they? Never mind. Lawyers tend to talk loud, don't they? That's the whole thing about the United States. And if you look, will this get buried in the quicksand of legal discussion? It may well, it may not. I simply don't know. And I wouldn't like to get into the game of predicting it. I think much more important that's happening in the United States is this extraordinary business of dumping immigrants in Democrat voting states. What's that about? Some immigrants found themselves in Martha's Vineyard. Now, you don't have to be have a great knowledge of the United States to know that Martha's Vineyard is considered, a rather nice escape route for liberally minded people out of New York. It's very, very posh and very expensive. What are those Venezuelans doing? Being exported to Martha's Vineyard. That's what's going on at the moment. So there's a lot of levers being pulled in the United States. I think the Trump thing is just one of them. Biden seems to have no idea what's going on, what's going on at all. I really despair of that. The only decent thing he did was not to replace Jay Powell at the Fed, which he could have done. Goodness knows where we might be right now, but things are going to be very, very painful. And the whole state there is pulling in lots of different directions. As far as Sri Lanka is concerned, I think the most important thing, sure, inflation, and yes, India is going to help, but India will only help, like the IMF is at one position saying, well, we'll help if the creditor nations do. And the creditor nations, like India, are saying, well, we may give some kind of help. I suspect they're not going to do an enormous amount until Sri Lanka is seen actually getting its economy under control. And it did say that it was moving measures to get inflation down. Well, it clearly hasn't, especially as food inflation has risen by 83%. That's appalling. And then, as you quite rightly say, there's China. What will China's attitude towards it would be? All I would say is, if you're taking help from India, one thing, because it's a neighboring nation, you're taking help from China, examine the strings attached. That's all I would say.
Thanks so much, Michael Wilson, for your time. Now for business updates across the African continent, Rotus Oduro joins us.
Morning, Fry. Good morning,
Hi,
Doctor. Good morning to all our viewers. Yeah, the Fed rate hike is going to be causing even more pain for currencies across the world. The Indonesian rupee, I think, has fallen to a new low from, I think it was 2009. The Japanese yen at a 24-year low. You talked about the pound a few minutes ago. The pound at a low not seen since 1985. What do you think this is going to do to emerging market currencies? I was just watching an analyst on a few minutes ago was talking about how your currency is the biggest trigger when it comes to fighting inflation. And even beyond, he basically mirroring comments that Bismarck Rewane had when we had him on the Global Business Report to strictly talk about inflation about a month ago, where according to FDC findings, 70% of Nigeria's inflation pressure is coming through the currency. As we speak, the parallel market now in Nigeria is back to about 700 naira levels. And so as you see the Federal Reserve continue to hike rates and the dot plots, that forecast that central bank governors over in Federal Reserve governors in the United States are seeing, where they're anticipating 4.6% of the dot plot projected into the new year, that is going to be more capital flows coming into the United States, which is going to increase demand for the dollar, and it has continued to appreciate. So you're going to see a lot of pressure on the Bank of England later today, as Michael Wilson was just talking about. I think they're now saying, for 75 basis points for them. So again, for emerging markets, it is going to be more pressure for us here. And it just comes at a really bad time when oil theft is not allowing us to defend the currency. And in fact, let's even get to this. One of the banks put out a notice. Look at that. Due to current market realities on foreign exchange, you will no longer be able to use your Naira MasterCard, Naira credit card, our virtual card, and prepaid Naira cards for international transactions. This will take effect on 30th of September 2022. This is a review from one of the banks on their cross-border limits on Naira cards. So essentially, if you want to make transactions, you're going to have to go source for FX yourself and use on your Naira cards. Look, even reports now, there was another bank, I can't even remember the name, that put out another notice saying that demand for school fees, foreign exchange for school fees, you're going to have to wait even longer because of, again, the phrase they like to use, current market reality. So, as I just said, and then this is, it is for full on, it is incredible, well, I mean, not quite Lebanon yet, but it's incredible pressure that you are seeing on FX here in this country. Now, good news though, Access Bank, they've gotten approval from the Central Bank of Nigeria for their hydrogen payment service. They're planning something pretty big with this hydrogen service where switching is supposed to be part of it. They want to create a big ecosystem for payments. So, you know, Rufai, you've been very bullish on fintechs and them being able to take on banks in Nigeria. But I got to tell you, with the holdco structure that a lot of these banks have taken, Access Bank being one of them, and the different verticals that they're going to be putting together, this full-on assault from the banks where they want to compete in the payment services feature. GT has Habari, right? So you got GT with Habari, you got Access Bank with hydrogen. Look, the consumers win. I'm excited. By the way, Access is very interesting. You know, with the release of the iPhone 14, them and a number of other banks, they've been sending out device financing notices to consumers saying, hey, you want to finance a phone, you can, you know, get access to that and do that and so as well. So interesting, very good timing for the banks for that to happen. But with respect to payment services and the ecosystem that they plan on putting together, incredible competition going forward between the fintechs and the banks in the payments space, and I'm really excited to see that happen. So good on the central bank for approving. I remember, in fact, they approved, wasn't it switching for Flutterwave? Yeah, that was, so look, lots of competition in that space. President Buhari in New York calling for debt relief, debt cancellation from developed nations for developing nations. He talked about the fiscal pressures that a number of nations are facing on the, you know, from the coattails of the COVID pandemic, Russia invasion of Ukraine. You heard Putin just yesterday calling for more what he calls military action to defend the nation. Biden at the same United Nations condemning that. So you're going to see more pressure on commodity prices. So President Buhari is calling for debt cancellation. Whether or not developing nations, you can see the gentleman from the United States folding his hands there as he's listening to him. Whether or not that is actually going to be Forthcoming, well, is another story altogether. Finally, I was watching Gustavo Petro, the newly sworn-in president of Colombia. I like to pronounce it as Colombia, and he was, in fact, on the sidelines of the United Nations, discussions that they were having, General Assembly. He said he's going to remove fuel subsidies. Now, he did say that it's going to be a staggered removal. In fact, when he was asked, he said, "Look, you plan on removing fuel subsidies. It is very unpopular. You just came into office." He said it has to be done. The poorest at the bottom of the pyramid, for poorest Colombians, will be shielded from it. So I think it's only they're going to stagger it and target it to where it's not going to impact the poorest. He's also, this is the same thing that William Ruto said, he's considering fertilizer subsidies. Remember this quote from Ruto, he said cost of living challenges are related to production. Kenya has now moved forward with fertilizer subsidies where they want to address production of food. So again, similar language from the new president of Kenya, the new president of Colombia. Are we seeing the lessons? That's
all right. But let's just go straight to it. I'm really happy that they are cannibalizing the cannibals. Now you know what I'm talking about.
Or the hydrogen
thing. Yeah, they're cannibalizing the cannibals.
Yeah.
The banks are old structure. Where do they come from? Venetian traders.
Yeah. That
traded on benches called banche.
Yeah.
In the 1600s.
Yeah.
That had credits. That's where the word credire, in fact, the initial word was credire, meaning credits. That structure is long gone.
Yeah.
It will be powered by technology. There's going to be scale. And the banks are understanding that's why they're having holdco structures. What do they normally have in their holdco structure? Insurance, yes. They put banking there. Most of the time, they might not be able to run the insurance, so sort of sell it. You remember FBN just sold to Salam.
Yep.
You get. But payments will upset the apple cart because they have the gravity of scale. And it's unprecedented. And you see, your brick and mortar can never do that for you. What one payment application will do, you have to build branches all over the country to be able to do it. Cement costs, let's say a branch costs 120 million naira, times 10 branches to get that scale.
Oh boy,
but an application will do that for you. So they are cannibalizing the cannibal already. And the good thing is, Rotus, they will take the same money they made from the hitherto brick and mortar structure to invest in the new reality of the world. Secondly, subsidies, the economic quagmire and everything, America increasing their interest rates. I think every Nigerian business planner now, or those in government running the economy, I recommend the book for them. Please get a copy of a book written by Yanis Varoufakis.
I thought you were going to plug your own book.
No, I'm not going to plug my own now. Yanis Varoufakis and the weak must suffer more than most.
The Greek
former finance minister where he told the story of what Greece went through. I think they should be reading that book. Yanis Varoufakis, the weak must suffer what they must. We are going to suffer what we must because we did not make the best decisions on time. There's no how the pass-through effect of the increase in interest rate will not affect us here. So brace up. At the same time, too, we are mopping up demand for election. I said we are near Lebanon. You said no.
No, we're not
Rotus.
there yet. We're not there yet. We're not
the truth is, when you look at it, what was the difference? What's the difference? The difference is the fact that Lebanon, too, had a lot of money at a point. The exchange rate was good. All of a sudden, it went berserk.
Right.
And people can't take their resource again. And that's why, what can we do? Let's talk solutions. Block governmental leakages, increase governmental revenues, shore up dead capital.
Okay.
All right? Get regulatory framework to revitalize the oil sector and also attract investors to come in. Investors want to bring their billions of dollars, allow them come in. Other governmental sectors, liberalize them, inject capital. The power sector, allow investors come in. Let's have cost-reflective tariff. When all these investments start to come, there's something that happens to the economy. It starts to dance, salsa, samba, and everything. Productivity increases, then the pressure starts to go down. You have more dollar. But now, nobody wants to touch Nigeria with a long spoon because regulatory problems are there. All sorts of problems are there. Insecurity, multiple taxation, all these things are there. The weak must suffer more than the worst. I just hope Nigeria doesn't suffer. Well, it is bred with Nigeria.
Nobody should be surprised. I don't know why anyone should be surprised that when the U.S. Federal Reserve, hikes rates, it affects other economies. the only two major economies that are not hiking rates at the moment, who are, maintaining things where they are or managing them as they are, it will be Japan and China.
Right.
Every other country is hiking rates. Philippines, Indonesia, the UK, for the fifth consecutive or seventh consecutive time today, is also going to hike rates. Nigeria is one of those countries where even if you hike the rates, as we did in May, to 14%, what effect have we seen? Now, these other economies, be it Lebanon, Venezuela, Sri Lanka, all those places where we have seen the direct implications of mismanaged economies. Their currencies, their debt, their resources, everything is benchmarked to the dollar.
Yep.
So if you are benchmarked to the dollar, then of course you are in trouble. Yep. The Nigerian naira is considered the 11th weakest currency in the world against the dollar. So we're not really in a very strong position. And hence you have those banks coming up with these measures that, use your naira rate card. Even if you travel abroad, you have to use a certain card. They put a cap on it. You can't spend beyond this amount. But the bigger issue really is how, many of these economies have also been mismanaged by the leadership. Which then takes me to the point, that President Buhari was making at the United Nations. At the United Nations. Yep. He talked about so many things, his own legacy, his commitment to rule of law, support, for democracy across West Africa, climate change, his respect for constitutional two-term limits, and how this was his farewell to the UN General Assembly, and next year there will be a new face representing Nigeria. But then he touched on the issue of debt cancellation. Yes, developing countries, they have challenges. They face many challenges, right? And he says because they are heavily indebted. So there should be global commitment to assist these developing countries. But it's all story.
It is.
What are those countries, developing countries themselves, doing to help themselves?
Right.
There was something they call HIPC, right? Yeah. Heavily indebted Poor Countries Initiative, which the World Bank and the IMF introduced in 1999. Okay, they moved from that. There was something they called multilateral debt review, something like that. Correct. MIDR or so. To help many of these developing countries. Yeah. And then, of course, during COVID, there was a lot of talk about debt cancellation to protect these countries. At a point, French President Emmanuel Macron was even quoted as saying, debt cancellation would be a good idea for these countries. But go and look at all those countries that have benefited from HIPC, MIDR. They are faced with other problems, poor leadership. And IMF and World Bank, the Bretton Woods institutions, they don't just give this support, the debt relief, which they prefer. They don't just give this support. They talk about reform. Right. They talk about, poverty reduction strategy that should be very clearly in place. Okay, but those countries themselves are not helping. But it's good at the level of principle and theory, for presidents, to keep saying, debt cancellation. When they canceled some debts that Nigeria owed at the past, we're still dealing with the fallouts up to now. But global solidarity in tackling poverty is important. Quickly, Gustavo.
Yes, Gustavo Petro. Yes.
Okay. Gustavo Petro is a socialist, right? He's an economist, leftist, and all of that. He campaigned on the basis of, seeing through the national climate plan. Yeah. He doesn't support fossil fuels management in his country. And there's a lot that is similar to what is going on here, because I suspect that's where you are going.
Of course.
He was saying that, look, dependence on fossil fuels and fuel subsidies benefit the rich to the disadvantage of the most vulnerable members of society. Yes. That's a familiar argument.
Make this.
Two, he says, the fuel subsidy regime promotes inefficiencies. That's also very familiar.
Yes, it is.
Okay, so after becoming a president, he then said he has to stamp out corruption, right, in the management of fuel and all of that. So subsidies will be part of the plan. So he's talking about a phased removal.
Yes.
Right? Okay. We have the example of Kenya. Now we have the example of Colombia.
Yes.
I know, I don't need to go there. In Nigeria here, it's the same recommendation that
Exactly.
whoever is going to become president of Nigeria
Yes.
next year should have the courage.
On day one, oh.
Well,
Day
it
one.
has taken Gustavo
Well, a
Petro.
month. He was sworn in a month ago.
You
Right,
know, so
right.
it has taken him at least a month. It took William Ruto just one day,
One day,
you know, to
exactly.
take that decision.
Yeah.
Well, these are problems that we need to deal with. Corruption, inefficiencies, over-dependence,
Yeah.
and President Buhari talking about climate change, which is also something they talk about in Colombia.
Yeah.
Renewable energy,
Indeed.
diversification of the economy, reduction of over-dependence on the
Fossil fuels.
fossil fuels
Yeah.
consumption. So all those things ring familiar. But would we ever get the political will in Nigeria
That is the
to
question.
take hard
Decisions. That's the
Thank you,
question.
Rotus.
Thank you so much. Thank you so much.